Texas authorities may prevent BlackRock Inc. and 9 European corporations from doing business within the state after Comptroller Glenn Heger determined the firms were boycotting the energy sector in defiance of a new rule. Welcome to Crypto Inquiry, where we are dedicated to providing you, the investor, and the crypto curious with factual information and topics. Our goal is to keep you informed, to make educated and timely decisions, and remove the fog of hidden information. Nothing is meant as financial advice, and always do your own research before investing. Here we are building a community to help each other stay informed and make the most of our financial gains. Wall Street heavyweights believe they would make their clients' assets more environmentally friendly while limiting the financial and political backlash from Republican areas. That is not the case in Texas. Texas is urging BlackRock, BNP, Paribas, Credit Suisse, and Schroders plc, among several others, to get out of the state. Signing up for ESG while forbidding the use of fossil fuels is not permitted in Texas. The list was completed by Texas Comptroller of Public Accounts Glenn Heger in response to a law implemented last year to safeguard Texas' major oil and gas sectors. State agencies are required by law to refrain from doing business with the listed businesses or explain why they continue to do so, such as if divestments would clash with their fiduciary obligations. Funds such as Texas's largest public pension fund, the $200 billion teacher retirement system, now have 30 days to reveal how much assets they have with the listed financial institutions. They will have to disengage from these anti-fossil fuels firms. ESG stands for Environmental, Social, and Governance, and it refers to the 3 important variables in determining the sustainability and ethical effect of a business or firm investment. ESG criteria are used by the majority of socially conscious investors to screen assets. It is a general phrase used in financial markets and is often used by investors to analyze company behavior and predict future financial outcomes. Environmental, social, and governance elements are a subclass of non-financial performance metrics that cover ethical, sustainable, and corporate governance problems, including ensuring accountability and controlling the corporation's carbon impact. Wall Street has been anticipating the release of the list as a barometer of how forcefully Republican state officials like Heger would continue a mounting movement against businesses' policies on governmental, social, and governance problems that they claim harm lawful companies. They're banking on the weak links in the red state's chain of command. Despite tumultuous markets this year, investors have continued to pour money into ESG-focused portfolios. More than 150 firms were asked in detail if they were avoiding oil and gas for long-term investing and financing. The basis is a regulation that went into effect on September 1st, 2021, that prohibits Texas governments from getting into contracts with corporations that have links to carbon-emitting energy industries. Texas Republican Comptroller Glenn Heger announced a list of 10 firms and 349 investment funds that would be forbidden from doing dealings with the state because they boycott energy companies. Trillions of dollars in investments, including those made by state pension funds and individual retirement savings, are in jeopardy, as is the fate of the fossil fuel sector. Companies like BlackRock are incorporating their left-wing ideological environment aims into their investment and finance strategies. At the same time, red state politicians have been raging against woke capitalism, specifically targeting environmental, social, and corporate governance ESG funds. According to Heger, the environmental, social, and corporate governance movement has resulted in an opaque and absurd structure in which some financial corporations no longer make decisions based on the best interests of their shareholders or customers, but instead rely on their financial power to push a secretive social and political agenda. However, the blacklisted companies have significant assets in fossil fuels. It makes no difference. They're destroying it with the money they've made by investing in fossil fuels. ESG's king is BlackRock. It is the brainchild of CEO Larry Fink. It is not limited to Texas. After determining that they would boycott the fossil fuel sector, West Virginia banned 5 large financial corporations, notably BlackRock and JP Morgan Chase, from future state contracts. Daniel Fieger, managing director of climate finance from Great Circle Capital Advisors, claims that ESG is doomed and that their attempts are in vain. According to Fieger, climate change will not go away in the long run, so the financial markets will have to deal with that truth, and he believes that is at the heart of the ESG debate. The Taliban has established a statewide ban on cryptocurrency and has begun detaining Afghans who refuse to comply with the restriction. The chief of criminal investigations at the Herat Police Headquarters, Saveed Shah Sadat, said that Afghanistan's national bank enforced a statewide ban. Mr. Sadat stated that the central bank issued an order prohibiting all money changers, persons, and enterprises from dealing with digital currencies such as Bitcoin. He went on to say that 13 persons had been detained, most of whom had been freed on bail, and that over 20 crypto-related enterprises had been closed down in Herat, Afghan's third largest city. After the Taliban regained Afghanistan, Afghans immediately adopted cryptocurrency to transport money in and out of the country. In accordance with the terrorist group's restrictions, world powers barred the Middle Eastern government from using SWIFT, the global financial system. Last year, the research firm Chainalysis rated Afghanistan 20th out of 154 nations in terms of cryptocurrency usage. The U.S. halted dollar transactions to Afghanistan's central bank and confiscated $1.7 billion worth of assets. Following the commencement of the new Afghan administration, businesses headquartered in France and Poland with contracts to produce Afghan money likewise suspended shipments. The Taliban stated in February that they would investigate whether digital currencies are permissible under Islamic banking principles. Afghanistan officially joined China in making all cryptocurrency transactions illegal in September 2021. The classification of cryptocurrency trade as fraudulent echoes the attitude of Indonesia's National Religious Council, which opposes cryptocurrencies for Muslims, claiming that the digital currency violates Sharia teachings and therefore not to be utilized by Muslims. Azarun Naim Sholeh, the council's head of religious decrees, stated that crypto included aspects of uncertainty and harm, making it illegal as a form of payment under Sharia law. The Bitcoin mining difficulty variation is a crucial component of the world's biggest blockchain, making it simpler or more difficult for miners to accomplish their jobs depending on the number of entities connected to the network. Basically, the more miners operate on the network, the more difficult it becomes to obtain the rewards and vice versa. This operation occurs every 2016 blocks, approximately every 2 weeks, and ensures that block output remains constant regardless of the number of miners operating. It has traditionally fallen in the summer months in recent years, since several nations, like Iran, prohibit mining during this time due to increased energy consumption. August will witness the fourth straight difficulty rise in Bitcoin mining. According to consulting firm Bloxbridge, a fresh rise may bring Bitcoin mining difficulty to 30.28 trillion, which would be the largest difficulty hike this year. The battle among Bitcoin miners is heating up as the difficulty of mining Bitcoin rises for a fourth time in a row in August. According to BTC.com, the world's largest cryptocurrency has witnessed 3 Bitcoin mining difficulty increases this month, and another rise would push difficulty beyond 30 trillion for the third time. According to Bloxbridge, a new difficulty rise is expected to be the largest this year. Bitcoin mining difficulty is now at 28.35 trillion, which is more than 10% lower than the all-time high of 31.25 trillion. Another significant difficulty increase would be beneficial to blockchain security, but would result in a decline in hash price since Bitcoin plummeted below $20,000. This week's drop in crypto prices comes just days after Federal Reserve Chairman Jerome Powell reaffirmed the central bank's intention to continue raising interest rates to reduce high inflation. Consultancy firm Bloxbridge released a statement saying, "We may see a difficulty jump doozy enough to set a new or close to new ATH in a few days. It's great for the network security, but unfortunately also means declining hash price, especially with Bitcoin's price drop following Powell's speech. Greater mining difficulty implies miners must solve a more complicated problem to earn Bitcoin. As a result, it means that they will need to employ substantially more resources to do this." Bitcoin and various other cryptocurrencies were down, with the top cryptocurrency presently trading at $19,834, a drop of more than 15% in the last month. The fall comes after a spell of record high inflation and numerous Federal Reserve rate rises to drive down consumer costs. During his statement at the yearly Jackson Hole Conference, U.S. Federal Reserve Chairman Jerome Powell stated that he will continue to raise interest rates to achieve the targeted 2% inflation rate. Powell stated that additional tightening of monetary policy might hurt the U.S. economy, but failing to reestablish price sustainability would be far worse. The recent slump in cryptocurrency prices was compounded by allegations that the collapsed cryptocurrency exchange Mt. Gox Bitcoin is planning to sell at 137,000 Bitcoin on the open market. Many crypto enterprises have gone insolvent in recent months due to this year's significant crypto sell-off, including Voyager Digital and Celsius Network. That's a wrap on this video. Let us know in the comments below if you think Texas was right to ban BlackRock. If you enjoyed this video, give this a big thumbs up. And do not forget to subscribe to our channel if you want to see more videos like this. See you next time.